And we're live. Welcome everybody to the today's webinar, where we're going to be talking about the assets to invest in for 2030. We've heard a lot about the Mag 7 the last few years, and the Mag 7 is changing. There are a lot of up and coming stocks that are projected to do well. So this is not financial advice. This is based on research that me and my team have done, and other research agencies have done as well. And we're going to go through comparing the Mag 7 from the last 5 years to the next 5 years. And so we can adjust our portfolios based on what we think might be doing well in the next 5 years. Because as we say, investing, past performance isn't always indicative of future performance. So what has done well in the past over the last 5-10 years may or may not do well in the future, especially given the fact that a lot of things are changing. We've got AI and robotics as the two big trends over the next 5 years, and we've started to see that start over the last year and a half, as a lot of companies are pivoting towards AI. I gave a presentation last week about AI and the future of AI and AI stocks, which we cover a lot in the newsletter. If you're a subscriber of Pro, you can go and get that webinar, which is about an hour long, talking about the changes that AI are bringing. We're going to talk a little bit about that today, but we're going to focus mostly on the new Mag 7, 7 stocks that are projected to do well in the next 5 years. My name is Trajan. I'm the founder of Morning Download. I started my career on Wall Street as an analyst, then in Silicon Valley as a consultant during the boom in the 90s. And then I have been a financial planner and been a CFO for many years. So I've been licensed, all the licenses you need as a financial planner. I'm no longer licensed because I don't do that anymore. But I'm still a CFO for several companies. So if you've got any questions, if you're watching this live, put them in the chat and let's get into it. I'm going to change share the screen here, change it over to okay, I've got to change something. Okay, here we go. So this is a history of the Mag 7, and this is live data showing currently how the Mag 7 has done compared to the S&P 500. And you can see this is going back 5 years. You can see that the Mag 7 and the S&P about 5 years ago were about the same, and the top line is the Mag 7 that has broken out. And over the last couple of years, particularly starting in 2020, 23, the Mag 7 just started taking off. And you can see this dip here toward the right of the graph. That was all of the tariff stuff, the tariff scare, which took the Mag 7. They took quite a hit and then rebounded. The last couple of weeks have been one of the best rebounds in recent history of the stock market. So it's done really well. But you can see that the Mag 7 still has been outperforming the S&P. So if you are a follower of the FIRE movement or Vanguard or Bogle or any of those that talk about investing in index funds, that has been the trade, the best way to invest over the last probably 15 years, where they say set it and forget it, just invest in low cost index funds, and you're going to do well. Which you're still going to do well with the S&P, but the Mag 7 has been the best. All of the gains, all of the returns that have happened in the S&P have come from the Mag 7. So those are the top 7 stocks, which means that 493 stocks are either going down or going sideways. So if you really want to make money, you did the best being in the Mag 7. If you can see this, you might not be able to read it way down here in the corner. Let me make this a little bigger. You can see that the Mag 7 outperformed over the last 5 years the S&P by 193%. So did much better. So it's been great to be in the Mag 7. And of course, the Mag 7 includes the S&P is included in the Mag 7. So the Mag 7 has driven the S&P. So let's get into it. The Mag 7 for Mag 7 for 2030. So first of all, let's define who is in the Mag 7. The Mag 7 is basically the tech stocks that have done really well over the last 5 years. They are Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. So are these companies going to keep doing well in the future? Not all of them, and we're going to go through why. And as we're doing this, then I'd love to hear your feedback on if you agree or disagree. Then comment in the chat. I'll leave the chat open. And of course, this is not financial advice. Number one is Tesla. Tesla got beaten down over the last few months. Not everybody is happy with Elon, and that has been reflected in the price and then the tariffs. But Tesla is projected to be by many one of the breakouts over the next 5 years for a few reasons. A common price target is Cathie Wood's price target of $2,600. And for reference, Tesla today right now is trading at $347. So that 347 to 2,600 implies a 775% upside from current level. However, Tesla has a high valuation relative to its earnings. It's got a PE of 119, so price to earning 119, which is very, very high. So if you're looking at adding Tesla, then you might want to wait for a dip like we had the one a couple of months ago. So let's look backwards to the last 5 years. The compound annual growth rate, or CAGR, over the last 5 years was 17%, which is pretty decent considering the stock market does about 10% a year. So Tesla, with all its ups and downs, has outperformed the stock market. The future projected CAGR from 2025 to 2030 is projected to be 51. And if you're looking at a more conservative estimate, say the stock's only going to go to 1,000, then it's 25. So you're still going to most likely beat the stock market by investing in Tesla. So note that a lot of these projections, like Cathie Wood's, for example, she's projecting $2,600. That is just targeting their FSD, their full self-driving, and Cybercab. So FSD, full self-driving, is going to be rolling out next month in Austin, Texas, where they're going to also roll out the Cybercab. So Cybercab is a competitor to Waymo, which we're going to get into a second. The Cybercab is a smaller version of the Tesla car. It's a two-seater without any frills, where it will compete directly with Waymo and with Uber and with Lyft. And they're going to sell these smaller cars that are going to be fully automated, where it will take you wherever you want to go. And that's going to start rolling out in Austin. And so they're just looking at, and then FSD is the full self-driving, which obviously Tesla and others have been working on for many years, that they say is just now reaching parity with human level drivers. So it can drive as well or better than a human. And they will be charging, or they currently are charging owners of Teslas to add the FSD. And that is a recurring revenue stream that, as it gets better and better, and they're also licensing out to other car companies, that is going to be a revenue stream. So FSD and Cybercab is the foundation of all these price targets. And of course, that is highly sensitive to interest rates and how many cars they sell, and the geopolitical turmoil that Musk has created over the last few months. He's stepped back from a primary role in the government, and now he's focused solely on Tesla. So one thing that is important to note with all of these projections is the analysts are not looking at what I think is going to be the biggest game changer, and that is the Tesla bot, or Optimus, that is not in the projections. And you can see here, if you go to, we're going to just switch over here. Okay, so if you go to the morning download stock analyzer, and this is available if you're a subscriber to Pro, you can get the stock analyzer as part of the Pro subscription, and you put in whatever stock you want. It will give you a summary of the stock, the market cap, employees, and then this is the best section that people like the most, which is analyst recommendations. You can see that about half of the analysts are recommending Tesla, and some are recommending it as a sell. And what's interesting about Tesla is most analysts and probably all people consider Tesla a car company. And it is much more than a car company. It is a robotics company. More and more, it's an analytics company. They've got about a $1 billion segment of their company that is energy storage, which you don't see about a lot, which is growing very quickly. If you want me to do a deep dive into just Tesla, then comment here and I can do that at a later date. And then here in the stock analyzer, while we're on it, you can see here how many analysts are recommending a buy or sell or hold. You can see the bulk here are hold or buy. 18 analysts say hold, 21 say buy. And then at the end, for each stock in the stock analyzer, you can get articles that are up to date. You can see here these, well, I haven't refreshed the page since I brought this up, but articles from the last week. These are bullish articles, and you can click the article and read it. And then these are bearish articles. And the reason why we built this is so you could get both sides to the story to make sure that we're objective. So we won't go through those now, but if you are a Pro subscriber, then you can get that. Just go to the morning download and upgrade to Pro. And you can get the stock analyzer and enter any stock that you want. So let's look at the revenue that can be projected from just FSD. This is data from Google's Waymo. So they bring in about $250 million a year in revenue from Waymo, which is just in a couple of cities. Phoenix being the main one, $250 million. They've got 1,500 cars autonomously taking people around in a robo-taxi. So that means Waymo is generating $166,000 per car annually, or around $13,800 per month per vehicle. So that's $450 per day per robo-taxi that is generated by Waymo. Not a bad business, $250 million a year. Drop in the bucket for Google, but it gives us some metrics. In comparison, Tesla, this is their robo-taxi. You can see it's just got 2 doors. It's a little smaller, scaled down car. They're aiming to have a minimum 100 million cars. And keep in mind that Waymo has to buy their cars. Tesla manufactures their own cars, so they can build whatever they want. And if they can get 1 million cars on the road and they sell more than that every year. So if they, over time, over the next, say, 50 years, 1 million cars on the road, that's $120 billion in recurring revenue. That is bigger than Uber, Lyft, and DoorDash combined. So you take that same data here that Waymo is doing with their number of cars, 1,500 cars, and 250 million a year, and extrapolate it to the same, using the same metrics, you get $120 billion a year. And Elon has said that he's actually aiming for 2 million cars. So that would be 240 billion. Compare that to the current revenue of Tesla is last year, 2024 was $97 billion revenue. And in 2023, it was about 96 billion. So if they can get 1 million cars on the road, then they're going to double the revenue. If they can reach Elon's goal, they will triple their current revenue, which of course will more than triple their stock. And that is just from the cybercabs. Just this week, Jensen Huang, who is the CEO of NVIDIA, said that humanoid robots will be a $50 trillion industry. The GDP of the United States is about 24 trillion. Europe is about 16 trillion. So just humanoid robots, he sees becoming a $1 trillion industry, meaning more than the GDP of the US and Europe combined, or maybe say the US and China combined. And the reason for it is because there is a global labor shortage and declining birth rates around the country. So it's hard to find labor to fill the jobs. This is a common problem around the world. There just aren't enough skilled people that can take the jobs, or that want the jobs, that want to work in a factory. And that's the first use, is industrial use, industrial production. Tesla has said that they're going to have 5,000 Tesla bots in their factories by the end of this year. And then next year, they want to increase that to 50, and then the next year to 500. And then they'll start selling it, not all in their stores. They're going to start selling it for other companies. And there are companies in the humanoid space that are already selling robots in factories. BMW has some in their factory, I believe, from Figure and others. So it's not just Tesla that is building these humanoid robots. There are a lot of companies. Elon said this week that he projects that Tesla will be the #1 maker of humanoid robots, and number 2 through 10 will be Chinese makers. And what's interesting about that comment to me is that if 2 through 9 are going to be Chinese manufacturers of humanoid robots, a lot of those Chinese robots will not be able to be imported into the US or Europe or various other places around the world because of tariffs or restrictions or just protectionism by various countries, which means that Tesla will have that market wide open. There are other companies in the US that are a little bit smaller, well, quite a bit smaller than Tesla, that will have some market share, but they won't be dominant. They won't be having a lot of the market share. Let's see. Okay, I wanted to show a video, but I can't find it. So we'll just keep going. If you have a chance, look at the Tesla bot and the how agile and how good these bots are, because they're going to be ubiquitous. They're going to be everywhere. And what is driving the chips behind these bots and behind the self-driving cars is the number one pick, which is NVIDIA. NVIDIA, you may have heard of, you probably have if you're an investor, because they've had a stellar year. The big question around investment circles is, will it continue? Just this week, they were shut out of China pretty much because of all the tariffs. They pivoted and went over to the Middle East and signed huge deals with Saudi Arabia for their chips. So NVIDIA is not going anywhere. They dominate AI computing infrastructure. They've got GPUs, graphical processing cards, and they're expanding into networking inference, and they're benefiting from the AI boom. So if you believe that AI and robotics are the trends that are going to be dominating over the next 5 years, then NVIDIA is going to be a major player. And they have been a major player. They've been around for a long time, and they will continue to be. So they became the first $1 trillion chip maker in 2023. And in 2024, their stock was up 180%. Kudos to anybody who was an investor in NVIDIA. You've done really well. And their chips they're in everything. They're not only in the self-driving cars, they are powering most of the LLMs like Grok and ChatGPT, and they all want and Google's Gemini. They all want a piece. They all want these chips because they're the best chips on the market. So the 2023 price target, you can see there that they could achieve a 5x return, which would be 675, which is a CAGR of 20%. Over the last 5 years, their compound annual growth rate has been 35%. So it could continue. A 5x return is 38%. If you want to be a little bit more conservative, if they're growing by 20% every year, then that's a 20% CAGR. Compared to the S&P, again, we're looking at the Mag 7 and how are you going to outcompete or outperform the S&P? And so you need a compound annual growth rate of 10% or more. And if you're looking at dollar debasement, then you probably need a growth rate of 12 to 15% because the inflation and the debasement of the currency is going to add to your hurdle rate. If the currency is being debased and the stock market is doing 10%, you want to do better than both of those, then you need to be doing 15% just to outperform. Otherwise, you may as well just be in the stock market. So NVIDIA is definitely one to keep an eye on, to consider putting a part of your portfolio in. So far we've got Tesla and NVIDIA as the two Mag 7, and they are included in the previous Mag 7. A couple of them are going to drop out. We'll get into that in just a second. Number 3 is Microsoft. Microsoft is one of the largest companies in the world, obviously, and they are a half owner of OpenAI, and they are heavily into AI. Their Azure cloud service has a huge market share. So they've got some moats around their AIs. They're invested in several companies besides OpenAI that are involved in AI. OpenAI just happens to be the biggest one. So in the past, Microsoft hit a $3 trillion market cap in 2024, and they're restructuring their OpenAI revenue deal to reduce it from 20% to 10%, their revenue sharing. And OpenAI is gradually getting more and more profitable and showing that they've got some staying power, even though that LLMs are turning into a commodity. If you're looking at investing in the LLMs, that's a hard thing to do. It's probably a better idea to invest in the picks and shovels and go for the chips. And Microsoft is doing all of it. They're investing in OpenAI. They've got their revenue from Azure, and then all of the other services that they sell, of course, which is why their earnings per share growth is projected to be 15%. So at that rate, that's a 13% compound annual growth rate. So it's okay. It's a little bit better than the stock market, and they're growing, but they've got competition. So their Azure cloud has competition with AWS, and OpenAI has got a lot of competition. So not my favorite of the bunch, but it is something to look at. Let's go back to the morning download stock analyzer and look at Microsoft. You can see, you can put in here any stock, any fund, whatever you want to get information on. And so they're now a $3.6 trillion market cap. And they've got a lot of services here. They've got Microsoft Office, Office 365, SharePoint, Skype, which they just shut down actually, LinkedIn, Dynamics. They've got Azure, and of course they're trying to put AI into all of their services as well. Now look at this analyst recommendation. That's a lot of green. Let's go down here to the buy recommendations. So you can see that no analysts are currently, and this is as of 2 weeks ago, no analysts are recommending a sell or a strong sell. 8 analysts recommending a hold, 55% are buy, and 33% are strong buy. So the analysts really like Microsoft because it's so stable. It might have a projected CAGR of 13%, but it is very stable. It is a top performer. It has done well, and they're in a lot of different sections. And then, of course, here you've got all of the news up to date. This is as of yesterday, as of the day before yesterday. So there's a lot happening with Microsoft. If you want to stay up on the news with Microsoft, see the bullish articles and the bearish articles, then go over to Pro and you can read that. Okay, so that is number 3. Number 4 is Meta or Facebook. So this doesn't get as much press as the other ones, but they are heavily into AI. They are into AI infrastructure, and they've got cash flow from their social platforms, of course, including WhatsApp and Instagram, and that funds their AR and their VR projects. And then they've got their Llama open source model that is doing very well because open source is hard to compete with. Um, Thanks for your comment, Jason. Yeah, not Jason's favorite. We're talking about Microsoft. So Meta kind of is flying a little bit under the radar because it's a lot of these companies. People love to hate them. People love to hate Zuckerberg and Facebook, but Facebook is a solid company. If you've ever done any advertising online, then you know that Facebook has by far the best advertising platform. Definitely better than X, better than Google. Arguably. So their 2030 price target has a 14% CAGR, and the stock could reach 900 by 2030 from the current price of a little bit under 500 as of today. So in the past 5 years, they've been at 23. So the future projected CAGR is 12%, unless they can really do well with their AI. They're doing a lot of things in AI and VR. If you're interested in hearing the plans that Zuck has for the company, go to the My First Million podcast. He just did a long form interview there, laying out the whole plans and what he thinks the future is going to look like. And if they can get better adoption for their AR and their VR, their virtual reality, and integrate AI into their companies, then they could do better than the 12%. So let's go over and see, just out of curiosity, go over to see what the analyst ratings are. I'm going to bring it up. It's called Meta Platforms is their official name. So they're at a 1.62. So they're half the size of Microsoft. But they've also got a lot of analysts recommending a buy. So a couple are recommending sell, 7 hold, and the majority are recommending a buy. Okay, going back to our list. Just breaking news. This was yesterday that Meta is down 3% after they announcing that they had some delays in their AI flagship. So if you like Meta, that might be long term, then now might be a chance to get into some Meta. Okay, so Palantir. This is one that is a little bit also under the radar. We covered this in this week's Pro issue. So if you're interested in a deep dive of Palantir, then you can go and sign up for Pro, and that will be coming out this Sunday. So what do? They're not a household name like some of the ones that we've been talking about, but they excel in defense, in industrial AI and machine learning. So they provide a lot of the machine learning and AI behind some of the functionality for contracts and weaponry, which if you're looking at the world, there's a lot of conflict going around in the world, which is terrible, and we hate to see that. It also benefits certain companies, and Palantir is one of the ones that it has been benefiting. In the first quarter, their revenue this year, the revenue rose 39%, driven by their demand for data analytics. So the expected Q2 revenue is even higher than that, over 900 million, as governments around the world continue to adopt their software. So if we assume 20% annual growth from $30, then we could be at $90 by 2030. That's a CAGR of 25%. And then let me show you just, let's jump over here. This is the Palantir. We covered Palantir a couple of weeks ago. Well, I guess we're covering it again. And after we covered this is the Pro article where we covered Palantir. And after we covered this a couple of weeks later, it was up 7.5%. So it's got a very high PE ratio, 512. That's even higher than Tesla's because um, people really like the stock and the contracts that they um, continue to get. So Palantir was up 340% in 2024 and has continued to go up in 2025 thanks to its artificial intelligence platform. And so we're not going to go into all the detail. This is just the summary. You can see all of this information. This is what a pro article looks like. We're talking about the growth. 7 straight quarters of growth that the company reported, and this is projected to have a compound annual growth rate of 41% over the next 5 years. That's more aggressive than the one that I was projecting. 41% is pretty good. And so that's Palantir, and then we covered some other stocks here, some secondary stocks in Pro that we won't go into. Okay, so Palantir. Yeah, so this here is just pointing out that we covered Palantir, and then after we covered it, it was up almost 8%, driven by that high demand. Next is Taiwan Semiconductor. So we've heard a lot about Taiwan Semiconductor and the conflict with China. One of the reasons why all the fears around China invading Taiwan are persistent is partly because of Taiwan Semiconductor, because they dominate the market. They have a 90% market share on manufacturing the chips. NVIDIA designs chips. They don't manufacture chips. Taiwan Semiconductor actually manufactures the chips. They're the largest chip manufacturer in the world, and they dominate in 3 nanometer and 5 nanometer technologies and chips, and they're coming out with 2 nanometer production this year. So in Q3 of last year, the revenue rose 36%. They have about a $1 trillion market cap. So that 2 nanometer mass production is scheduled for late 2025, and then ramping up in 2026. So they expect to grow 30% last year, 24% this year, and 18% last year. So slowing down a little bit, but still a 5-year projected CAGR in the future of 25%. That's over double the 5-year CAGR of the S&P. And it doesn't sound like a lot going from 10% from the S&P to 25 with Taiwan Semiconductor or some of the other ones here. But if you map that out over years, like we talked about at the beginning of the presentation, it makes a huge difference. Like we saw, the difference between the S&P and the Mag 7 on the last 5 years was almost 3x. It's almost 3 times. So you're going to do a lot better. Okay, here's one that is not currently in the Mag 7. And if you're a Bitcoiner, you're well aware of MicroStrategy. MicroStrategy was the best performing stock last year. And what they do is they are acquiring Bitcoin. They used to be a company that they still do data services, but then they had a bunch of cash on their balance sheet, and they were trying to figure out what to do with it. They didn't want to put it in bonds because bonds haven't been performing well. They didn't want to put it in cash because of inflation. And then around November 2020, they decided to start buying Bitcoin. And now they hold 560,000 Bitcoin. So they're the largest holder of Bitcoin currently, even larger than governments. The US government has 190,000 Bitcoin. MicroStrategy has 560,000. So if you're a believer in Bitcoin or a believer in Bitcoin as a monetization tool, then MicroStrategy is a company to look for. So they're buying all this Bitcoin. It's like a leveraged play on Bitcoin. So when Bitcoin goes up 10%, MicroStrategy may go up 15%. Also to the downside, when Bitcoin goes down, MicroStrategy goes down even more. So what is starting to happen is MicroStrategy is using these to come out with their own bonds. And we'll go into this in more detail. I can do a more detailed video if you're interested about MicroStrategy, how they're revolutionizing finance using Bitcoin rather than bonds. Basically, Bitcoin-backed bonds, where investors can buy a bond in MicroStrategy, and it's got the coupons of a bond, but the upside of Bitcoin, which is why MicroStrategy is able to borrow money for close to or at 0%. They raise billions of dollars at 0%, and they go and take that money and they buy Bitcoin. And so far, it has worked out great for them, and they've got a projected future CAGR of 32%. So their performance is tied directly to Bitcoin, and of course, Bitcoin has risks, regulatory risk, which are less now, but also market risk. Or you could just hold Bitcoin. Bitcoin has been the top performing asset 13 out of the last 15 years. And I know a lot of people, especially older people, say, I don't want Bitcoin. Bitcoin, I've heard, is terrible and it's volatile. However, the volatility is going down gradually year after year. And it is now the 5th largest asset in the world. Behind gold is number one, and then a couple of companies like Google and Microsoft, and Bitcoin has just got the 5th largest spot. So it's definitely sticking around and going anywhere. So if anybody wants more information on MicroStrategy, then we can cover that in a future webinar or a future pro article. So let's look at the past 5 years CAGR versus the future 5 years. So you can see here that Tesla is projected to speed up. NVIDIA slow down a bit from the last few years. Microsoft slow down a little bit. So they're all slowing down except Palantir, about the same. MicroStrategy projected to speed up, tied to the price of Bitcoin. And Bitcoin does well in recessionary environments, high inflationary environments, or when the government prints a lot of money, which they will continue to do because they can't help themselves. So, so the Mag 7 has done great over the last 5 years. It probably won't continue as well, but the projected CAGR is at 15%, which is higher than the 10% that the market has historically done. So who's missing? Who did we kick out of the Mag 7? Well, we kicked out Apple and Amazon. So why aren't they in these projections? And these are my projections and also a bunch of analyst projections. So it's not just me. Apple struggles because, one, they have reached the end of the road as far as the iPhone upgrades. It used to be that every time they upgraded, they came out with a new iPhone, everybody would rush out and get it because it had a whole bunch of new features. But they've added all the features that people want. So there's not a lot they can continue to do to optimize the iPhone. Of course, they still have solid revenue. They have market share. People love Apple, and but they've made some missteps. They're way behind in the AI race. If you've used Siri for the last 10 years and compare it to any of the AIs like ChatGPT or Grok or basically anybody, Siri is just it's just a dinosaur. It doesn't work well. If you use it on your watch, it says go look on your phone. It's just not intelligent. They are way behind the race, and they know it. They're trying to figure out what to do. Their last earnings call, they said they plan to release an AI in 2027. So the world will be totally different in 2027, especially with AI in robotics. So they're way behind on AI. And Amazon is also behind. Amazon, of course, like Apple, is still a solid company. Amazon is employing a lot of robots. Speaking of humanoid robots, they have almost as many robots as they have employees now. They're trying to get more into AI. They've got their AWS, their Amazon Web Services, so they've got a solid business as well. But they are not growing like some of the others. Apple has slowed down. Amazon is doing okay. And then an honorable mention, not in the Mag 7, but something we should consider is Google. Google is at a crossroads because they've been a bit behind on AI as well. They came out with Gemini. They're putting AI in everything. They've got a lot of properties. that they can infuse AI with, but they have the innovator's dilemma. They have their main business about, I believe it's half their revenue or more comes from, no, it's 2/3 of the revenue comes from Google search. So when this is happening now, people are going to ChatGPT and others to get their questions answered. Fewer people are searching on Google, but also when you search on Google, if they put AI in there, then they can't monetize that as well. So they're stuck in a tough spot where they need to keep up with the AI innovations, but it's harder to monetize and they will cannibalize themselves. I'm currently listening to a podcast with Sundar Pichai, who's the CEO. If you're interested in more Google, also it's the All In Pod, and they asked him, Sundar Pichai, are you in the middle of the innovator's dilemma? And he didn't really give a straightforward answer. He said, yeah, we're going to put AI more and more in Google search results, and we'll figure out how to monetize it later. So for a company that is generating 2/3 of their revenue from search, I found that to be a very unsatisfying answer, maybe a dangerous answer, but I would not count Google out. Obviously, they're a dominant company, one of the top 10 biggest in the world. They've got YouTube, which is the biggest media property in the world, and they've got a whole bunch of they've got sticky users, people using YouTube and Google and all of the G Suite, Gmail, and everything else. But they're struggling, just like Amazon, just like Apple is struggling with AI. Google is struggling with AI because they are stuck in what they have built a very profitable business that is now getting disrupted by AI. So I consider that a one to watch. It could do very well if they figure it out, but I haven't seen that yet that they have figured it out. Okay, so just out of curiosity, just to end this, that covers all of them. Let's go up to here to see what our stock analyzer has to say about Google, and they are called Alphabet. Yeah. Okay, so Alphabet is at $2 trillion, and we got a lot of bullishness. But much more hold. And that's what I was just saying. What my opinion was is that's more of a hold for me. And you can see compared to some of the others that we've looked at, a bigger chunk are considering Google to be a hold, probably because they're in this weird spot that they've got to figure out what to do, how to not cannibalize themselves. So those are the Mag 7. So if you want access to this analyzer, or if you want access to our weekly stock analysis, where we cover 2 to 3 stocks every single week on a deep dive in these long form articles, then jump over to Pro. I put the link down below, the morning download upgrade, and then all of these presentations that I do are available in Pro. You can get an archive of all the past articles. You can get all the past articles, all of the videos, the deep dives that I've done, and we'll continue to do these. Like I said, the one about AI, we dug into what's happening in AI for about an hour, all the implications of AI and robotics, which are the two biggest trends over the next 5 years, AI and robotics. We dug into the companies that are doing well or projected to do well, the companies that will be disrupted and not do well. That is in the Pro subscription. And then I recorded a course, pulling from my years as a financial planner, recorded about 3 hours of content that is a course that is part of the Pro subscription on how to reach financial independence. I retired when I was 47 because I followed this plan. I followed the plan that I outline in the course on how you can retire in 10 years or less, especially if you pick great stocks like the ones that we outline in Pro. And so it goes through how to manage debt, how to pay off debt, how to manage your credit score, how to invest, where to invest, how to psychologically handle investments so it doesn't stress you out, which is an issue for some people. So just how to handle your finances, and it walks you through how to create a financial plan for yourself. And as part of the Pro subscription, there's a template you can fill out. You can make your financial plan based on the template, and then you can email it to me, and I will take a look at it and give you suggestions and feedback on how you can make it better to increase the likelihood that you're going to be able to reach financial independence according to your goal. A lot of people in the community in Morning Download are either retired or planning to retire in the next few years. So we've built a lot of tools that can help you plan for retirement. And one of them being the financial plan, the course. And then we've got several sections. This section, for example, is all about retirement. We've got the retirement calculator that you can use to input all of your information about when you want to retire, how old you are, how much you want to withdraw, how much you're saving, what your investments are, and it will give you an output down at the bottom that will show you how you're doing and how much money you'll have when you retire, and then if you will outlive your money or not. So that is available for the Pro subscription. You've got the retirement calculator. And then a lot of people are interested in dividends. So we've got a lot of dividend resources, top dividend stocks. And then we've got a whole page of calculators. Like I said, the retirement calculator, the investment calculator, budgets, paying off debt, dividends, student loans, and options. So if you need help with any of these, if you're in debt and you want to pay off debt, or if you're interested in dividend stocks, these calculators will help you manage that and figure that out. Okay. So if you're interested in all of those, and especially the deep dives, then go to the link below, morningdownload.com, upgrade, and join our Pro. And this video will be available for all our Pro subscribers in the archive, along with all the other ones that we do every week. So if you've got any questions, then reply to any of the emails for the newsletter, and I will see you in the newsletter. Thanks for joining me.